It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to another video. Now in this one I'm going to be going over a recap on gold. It was a very nice trade. There was multiple scaling opportunities. All my targets all the way down here. There's multiple scaling opportunities and it was just a genuinely nice trade, in terms of textbook setup. Everything lined up nicely, in terms of momentum. We were buying in the selling in the premium. We were taking targets at discount. So it was a very nice trade in terms of what should happen. Now, obviously, you can use this to learn. I find when people trade recap and they discuss it properly, that's when you start to learn a lot. Okay, so before I let me just quickly put the candle off to here because this is where the whole trade ended. Right, this is where I went to bed not went to bed, but this is where I stopped trading. So the first entry was here, but I won't jump into that in a minute. I'll jump into that in a minute. So first things first, if we go on a high time frame, we can see here that price overall is bearish, right? We're moving to the downside, and again, when we've spoken about market structure earlier on in the video, it's very important that we map it out. Okay, so we got a high here, we got a low. We do have a low here, we have a high there, low there, high there, low, high, low, high, right? But you get the idea. Price is moving to the downside. And this is what I mean is when you look at market structure, it doesn't just move in a channel, right? It moves how it wants to move. But as long as you understand swing points is very important, because like I said, I always say in the course, understand swing points is very important. Okay, so as you can see, price is overall pretty bearish, right? It's moving to the downside. So what we're gonna do, we're gonna look to sell. So I didn't go on any other time frames because I was happy with my high time frame bias anyway. I'm at this point bullish on the dollar short term because around the time it was the end of June, we're coming to those under pumps and dumps, and fundamentally I was pretty bearish on the dollar anyway, bullish on the dollar anyway. So yeah, price moving bearish, so we knew that we were looking for sells. Okay, so what I'm going to do is if I just jump straight down to the 1 minute time frame, you can see here I've already got the trade out. I should have went back in time and just let it out and manage it, but I'm going to explain everything in my thought process. Okay, if you look here, right, we can see here that price is moving bearish. There's imbalances in price, and we must obviously adapt to new market changes. So once we see an initial move and a break of structure like we see in here, because like I said, I trade break of structure I map out using the candles, the bodies, right? So I don't use the wicks and look for break structures. I use the bodies. Okay, type 3 I believe it was I use. So whatever you use is completely up to you. So a lot of people, this wouldn't be a break of structure, but to me it was. Also, we took out this previous range, and also as well, another thing to mention within here is look at the sessions that we were trading. I'll jump into that in a minute. But as you can see, price came back up, filled this imbalance, and also it mitigated an order block here, right? And when I say an order block, this is a breaker block trade setup. Okay, so if you don't know, well, you obviously know what a breaker block is, but it's pretty much just mitigating an order block from previous price, right? Imbalance, mitigated an imbalance. We've seen a sharp sell-off, right? We've broken structure. Momentum at this point is to the downside because, as you can see, it took 22 bars, right? Now, I know this is titled under confluences, and I'll jump into the confluences separately, but I wanted to show you, obviously, in action what the confluences are. So we're trading from order blocks, and within those order blocks, we're looking for the imbalances. Okay, so as you can see here, this order block is here. There's an imbalance in price here, right? So this again is a valid order block. Also, break of structure. Okay, this Fibonacci tool here, as we've spoken about earlier, is our, in the pink zone, that's our, premium zone. In the blue zone, that's our discount zone. So when we're looking to sell, we want to sell at a premium, and when we're looking to buy, we want to buy at a discount. Okay, at this point, we were looking to sell because the overall structure of the market was bearish. So we were only looking for sells. I wasn't interested in buys. I don't care about looking for buys because the market structure is bearish, right? So yeah, pretty much we're looking for sells. Okay, so as you can see, price came back into this premium zone in which we're looking to sell. We did, however, create this sort of, we sort of tapped into this imbalance and sold off. Okay, But at this point, I didn't take this trade here. You could have if you really want to. I can include it if you really want to. You could have took the trade. It's absolutely fine. It's 3 pip stop because obviously gold. This is gold. This is different. This may look like 30 pips, but on gold, the point is in the numbers there. So you could have took a sell from here and scale in here. That's absolutely fine. But if you want extra confirmation, take the sell off the next trade, right? So this is a nice, just under 10.5% trade. It was a 4 pip stop and a 41 pip take profit. So it's a very nice clean move in terms of textbook setup. As you can see, we're selling in the premium zone, which is this Fibonacci tool, right? So 0.5 to the 1 is our premium zone. In terms of momentum, you can see that I measured from this high to this peak in price to this low. As you can see, I only took 22 bars to reach the downside, right? So from price to reach from here to here, it took 22 bars. However, when we look at the bullish market, we can see here that it took 82 bars from price to reach the same point to the same point. So that indicated that there's so much bearish momentum in the market right now. So we would not want to buy one bit. We only want to sell. Okay, if you wanted to buy, you wanted to look at breaker structures, that's fine. You could buy from this imbalance, you could buy from this order block mitigation. But when you trust the process and you trust the market structure, right, we're only looking for sales. So we're not interested in these buys here because we're looking for the bigger returns, right? Because if I bought from here, right, after this, let's say bullish close here, right, if I had bought from there, my stops would be below here and I'd be targeting this equal highs here. That's only 1.82%. Why would you want 1.82% when you can have just under a 10.5% trade? You get the idea. This is why structure is very important. Again, as you can see, price tapped into it and we broken structure. If I just move this out the way, you can see here that we had this nice structure break. SB just means structure break. I used to use the term BOS, but it got quite annoying. When I used to write BOS, it just sounded like writing bullshit, right? So I changed it to structure break, so an SB, and it sounds much nicer, okay? So as you can see, we had this structure break to the downside, which indicated a valid order block, again, because there's an imbalance in price here, order block here, nothing above there, and again, as always, we're selling at a premium. So if we wanted to trade this imbalance, it wouldn't be valid. We wouldn't want to trade an imbalance because it's not in the premium zone, right? So if you trade imbalances, it would have been taken out depending on where your stops are. So obviously we traded the open of the order block because there's an imbalance there. And as always, we're selling in the premium. And as you can see, price tapped into this very nicely. This bearish candle, I think my entry was a bit lower. But this bearish candle closed below the previous bullish candle, which indicated a great entry signal. And as you can see, price just continued bearish and continued bearish. Came back up as expected. And as you know, there was an order block here. And as always, if you are trading order block, you need your stops above the wick. So if you wanted to trail, if you wanted to not trail in, but if you wanted to take a trade here, as you can see, price came up, right? What happened is this bearish candle, right, closed below the previous bullish candle. So what we could have done is entered on the open of that, right? We know there's an order block here, but we need, as long as we're staying below this wick, that's all that matters, right? Stops above the wick, 3.9 pips, and again, just targeting down here. And again, that's a nice scaling opportunity with a 5.3% return. But this trade was very nice, right? The reason why I entered here and targeted down here is because there was a 1 minute order block which hasn't been touched, hasn't been tapped into. You can see there's an imbalance in price here, right, in which the order block was valid. And it's the most recent order block prior to this break of structure, okay? I didn't target this order block here because even though it created this breaker structure, this was the most recent breaker structure. And as you know, when you've gone through the course, we focus on the most recent order blocks, right? So we were targeting down here. I was happy with the open. I could have got the equilibrium if I wanted to, but we just, looked to target the open of an order block or an imbalance. So I was happy with that. Very nice trade. Scaling there, as I said. Also to mention as well, there was liquidity resting below. As you can see, this is a perfect equal low, and this is what I mean by equal low, right? As you can see, if we just move this out of the way, this was an equal low. Price tapped into it, seeing a short-term reaction. As always, I speak about this all the time. Double bottoms and double tops, they hum and harm with it. I don't trade it personally, right? But I never traded it personally anyway, but we see it as areas of liquidity. because we know, yes, there was a double bottom. We did see a short-term retracement to the upside, right, in which we're looking to sell. Then the people that were buying here with their stops below all the way over here, looking to hold the trade up to the highs, they would have been taken out of the trade. Because we know that double bottoms, they don't really work, but they do if you're looking for a quick scalp, but they don't really work, right? We're overall looking for sales. Why the hell would we want to buy anyway from a double bottom? You get the idea. Also, if you're looking at this and you think, well, this is a head and shoulders, I could have just traded a break up a head and shoulders. Again, that wouldn't work, because if you're especially trading break and retest, you have this neckline here. Price didn't even pull back, right? And this is the power of order blocks. We know that price is going to pull back to this area. Again, let me put this visual order to the back. Again, if you look at this order block here, yes, there's an order block here. Yes, price closed above, but it's within this wick range. So within this whole range was 6 pips. So we would have had a 6 pip stop if we were taking the trade off the open, because remember, this is cut in previous price. So our stops would have been above those wick, and we would have still been in the trade regardless. Okay, but yeah, very nice trade. So when I talk about confluences as well, another one here is measuring its current momentum. So 7 bars to reach this point to this peak, then from this point to this peak as well, from this peak to this point, it took 12 bars. So that tells us momentum is still bearish. Momentum is still to the downside. There's an equal low here. Again, that's liquidity. We're targeting a 1 minute untouched order block with an imbalance just above it. And we're looking to take our profits within the discount zone anyway, the whole range. So it's a very nice trade. We're selling in the premium. We got the momentum, and those are the 2 confluences that I look for. Well, 3 confluences if you want to include imbalances, but in order for an order block to be valid, it needs to be in balance that hasn't been tapped into. You need to remember that, okay? In order for an order block to be valid, there needs to be an imbalance above or below the order block, right? But it was a very nice trade. We broken structure. We mitigated order blocks. We could have caught the initial move here, but it wasn't as high probability as it was this one, just because this broken structures, and this was more of a confirmation trade, right? Because this was short-term bullish movement. We broken structure, right? Sort of, I suppose, created this double bottom. We just knew that when price is creating a double bottom, it's going to eventually break structure because it's just liquidity. Right, the market's attracted to liquidity. There's imbalance in price, which has already been tapped into, but it's been partially taken. But there's an order blocks down here, so we know that price is going to tap into those lows, right? And again, we're overall looking for sales. This whole move that you can see here, just looked like a compression into this supply zone. So if you want to sell from there, so that's fine. This was a classic compression into our supply zone. Okay. So that, folks, was a quick recap on gold. I say quick, it's currently 13 minutes into the video. But it was a very nice trade. The confluences were this, right? So these are the confluences that we look for whenever we're looking for a trade. We look for momentum. So we just pretty much, if we have, let's say, resistance zone here, support zone here, right? And price comes into it. Right, and then same for this support zone. That's not very clear. Price comes into it. Right, you got to look at this and measure which was quicker. Was it quicker for price to reach the downside, or was it quicker for price to reach the upside? Right, as you can see, it took 22 bars to reach the upside, and it took 15 bars for the bears. So what does this tell us? Well, it only took 15 bars for the bears, but it took 22 bars for the bulls. So the bears are clearly in control because it took less bears to push price down than it did bullish, for the bulls to push price up. And it's exactly the same when you look at this here, right? We look for this bullish move when the bears were in control. Well, when the bears were pushing price to the downside to the equal point, it took 17 bars. But for price to retrace back to this equal highs, right, or whatever, if price continued upwards, then that's fine. We just measure the current highs, right? If price went like that, we just measure these highs, right? As you can see, it took 17 bars for the bears to be in control, 15 bars for price to push back up. So this tells us again that momentum is to the upside because it took less bars than it did for the bears, right? When it comes to this, the reason why I'm just quickly touching up on it is because I wanted to just quickly touch up on it. Reminder doesn't hurt, right? It's nice to have a reminder now and again about trading. Again, when price is trading like this, right? What we want to be doing is we want to be selling within this premium zone. So if there's an order block here, what we're going to do is, right, if all these lines here that you are seeing are order blocks, what are we going to be doing? We are going to ignore this order block. We're going to ignore this order block. Why? Because it's not even in a premium zone. Why the hell would we want to sell here when we could sell the hell up here? You know? And this again would be a bigger return. Price will then tap into an order block and sell off. So the reason why I use the discount and premium pricing zone tool with the Fibonacci tool is simply because it helps invalidate a lot of POIs. And you know, it's the exact same when we're looking for buy opportunities. You know, if I just quickly go ahead and clear all this, if we're looking for buy opportunities, and let's say price is doing its own thing, right? We're looking for buy opportunities, whatever, right? So price is coming down, order block here, order block here, order block here, right? If there's two order blocks in the buy zone or the premium zone, that's fine. All we have to do is know how to react to it. If price started to create this and we've seen a fake out there and price quickly resume back into it, broken structure above, we look to mitigate that order block, because this tells us this is the accumulation phase. So price will then tap into the order block and continue upwards. Okay. If, however, price ignored that move and continued bearish, then we look for a reaction off this one, right? Either if it's a bullish candle above the previous bearish candle, again, that's confirmation that bulls are in control. As soon as we see that shift in momentum to the upside, right, that's when we get into the trade. But anyway, going back to topic, if there's an order block here, order block here, order block here, well, let's just ignore this one for now, right? If there's an order block here in the discount zone, there's two order blocks here, we wouldn't buy from any of those order blocks because it's not within the discount zone. Again, it just helps invalidate point of interest, POIs, right? So yeah, you can look at this if you wanted to, guys. You can save it, it's up to you. Price simply just tapped into this nice imbalance, obviously a breaker block. We've seen a reaction, we've seen the structure breaks. This is a valid order block of an imbalance. We're selling the premium, so if you want to take a sell position from here, that's absolutely fine. If you want to take a sell position from here, that's absolutely fine, but you would have been stopped out at break even, but you could have scaled in, right? Again, to confirm, if you want to get that better entry, you want to confirm that move. Again, we've seen a structure break, equal low liquidity. Again, we want to be selling in the premium zone. Okay, so price pulled back into the premium zone. This is the only order block within this premium zone, so we're going to sell from it, right? You could either sell from the open as a risk entry, or you could wait for that bearish candle to close above the previous, close below the previous bullish candle, and then take a trade from there and look to target down to the lows. Targets would just simply down to this 1 minute order block, which hasn't been touched into, and again, it's just targeting these sort of equal lows, right? Again, we don't want it down here because price didn't really tap into this area. It's already sort of tapped into it here anyway, and this is the most recent order block before this break of structure here that we've seen. Okay, so again, guys, it's a very nice trade, a very simplistic trade. The confidence is lined up. And another thing that I forgot to mention as well, make sure that you're trading within inside a certain kill zone, right? At the time of this trade, it was between 12 to 1 o'clock, right? Specifically between 12 and 12:15. Well, let's go, yeah, 12 o'clock right until 20 past 12, right? And that is a great time for reversal. So when you see, this is the New York session kicking in. This is my personal trading hours, right? When 12 o'clock comes round, between 12 and 1, we could expect a reversal, right? It could happen at 20 past 1, could happen at 20 past 12, could happen at 12:15, we don't know. But as long as we start to see those reactions and it's within inside that hour, we know there's going to be a reversal about to happen. Because what happens is, you'll have the Asian range, which will be over here. It will have a London push to the downside. And then what will happen is, we see that short-term retracement to the upside. And then New York kicks in. And whatever price is doing at the current time, price will just reverse. So as you can see, during London, price is moving up. Right, this compression into our supply, initial point of interest, compression into supply zone. Price sold off as the New York kicked in. Again, the overall structure of the market is bearish. I love trading the New York session reversals, and this was a brilliant trade, guys. And again, it was a nice, just under 10.5%. So no matter how you entered, there's multiple opportunities. I haven't done much recaps, but I hope this has made sense. But as always, guys, I'll catch you on the next video. And yeah, thank you so much for watching, guys.